Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Thursday, February 26th. And what a day it was. NVDA earnings came out after hours on Wednesday, originally went up. This morning traded lower, took the market with it. But what an interesting day. Markets reversed and end mixed after early morning lows post earnings. My name again is Dr. Jeffrey Scott. I am Market MRI Pro at gmail.com. My Google group is called Top Down Trader, and my website's marketmripro.com. I always start with a quick presentation. Welcome to those of you that are new to the channel. If you are new, hit the subscribe button, hit the alarm, and that will notify you of when I post things. And you'll hear about Top Down Trader and then a couple of slides. That's another thing you can do. This is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. I intend the videos to show you how I use my tools for top-down trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I've got tools in multiple platforms. My Google group is called Top Down Trader. That's where I will communicate with you. I will let you know when I post things. I'll invite you to programs, and I'll give you $100 off if you buy my tools, except if there's a special sale where I don't accept the additional discounts. You just go to Google Groups, click All Groups, find Top Down Trader, link your account, let us know how to contact you. Change your mind, you want to leave? That's your business, because I have nothing to do with it, because it's all controlled on your end, which means you won't be spam for life if you sign up with me, because you can unspam yourself. Know your news and earnings, so we could have an interesting day tomorrow. We got a delayed PPI for January. We've got construction spending also delayed from November, and then the December one, and a Chicago PMI. To me, the market seems to be struggling with, the economy was supposed to be great. The GDP was not. Maybe it's the shutdown, but maybe it's telling us something. We still have inflation. You heard on the State of the Union from all the detractors and the non-MAGAs how everything's more expensive. It is, and I'm apolitical, but I would tell you that once things get expensive, they don't get cheap all of a sudden. They just may not get more expensive, which I think is what we're seeing. I think we're being helped by cheap oil. God forbid oil runs up, because that will be inflationary. And then we got a new Fed person coming who may have to deal with that dreaded word of stagflation of a slowing economy. Employment looks like it might be slowing and still having inflation. So I think there's a lot of things, and every time we get these data points, these things can cause the market to have a fracture one way or the other. We did have earnings after hours today. The big winner was Dell. Duolingo was down. I think Zscaler was down. And right now, I just recently checked the futures, and I'll give you a little bit more detail on the earnings. The futures right now, and I always like to tell you because they change over time. Dow's down 250 points. The Nasdaq's down 70. E-minis down 23, as is the E-mini Russell's. Gold is up a few bucks, $9, which percentage-wise is kind of nothing. And if I look at earnings, XYZ is up 23, AAOI 17%, Dell up 10%, Netflix up because looks like they're bowing out of the bidding for Warner Brothers. The stock was down significantly because of it. Up after hours, it's up 10%. Paramount's up as well, I guess, because they figure the bidding is done. Big downers, Duolingo down 21, Zscaler down about 10, ESTC down 9%, CoreWeave down 8.6, and FLUT Flutter down 8.6 as well. So mixed earnings. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Any questions about what I do, my software pricing, how do you get it? Where did I learn this from? MarketMRIPro at gmail.com. And if you have the software and have any issues, coding at marketmripro.com. We have had a number of updates in the product, And I'm really happy with where we are now with speed and stability. Every once in a while, we get a bad data point, and it takes a little while to fix that, another data update, but you'll see what we got. So I just want to start with this for a couple of reasons. One, I don't usually go into intraday charts, but we do them in Market MRI Pro, and this here is the Spider 1 minutes, and I just want to show you what we had today. We had a massive drop at the open. We had an attempted rally into the lunch hour, and then we sold off again. And then starting at about 1:30, we rallied and kind of got back up to the same level. So I don't think we got up to the halfway point, but it was an interesting day in the market. I can't remember if this tool is going to help me out here. Yeah, that's not going to do it for me. But we did have a nice bounce. The question is, where do we go from here? If we look at the daily briefing, you can see volatility was up. Never want to see that leading. Russell ended up being up 0.53 and closing at the top of its range. The dollar up 0.07 at the bottom of the range. Diamonds in the middle of the range, flat as a pancake, up 0.01%. Spiders down 0.5% in the middle of the range. And the Q led to the downside, minus 1.21 in the middle of the range. And you could see at one point the Qs were down over 2%. Bitcoin continues to be weak this week and down another 2.5%. What surprised me was the strength in the breadth, and that um, although this felt like an ugly day, especially since I'm overweighted in data centers and energy related plays, um, when you looked at the broader market, it wasn't as bad as I thought it would be. You could see at the 52 weeks or 12 months, if you look at new highs minus new lows, the NYSE is still 100, over 100, 112, and NASDAQ's positive 42. If you look at sectors and industries versus the prior day on the S&P, they're better. On the NASDAQ, they're worse. On the NYSE, they're better. So right away, the NASDAQ looks different. If we look at stocks above stocks finishing higher today, 68% of the S&P 1500, only 52% of the NASDAQ, and 65% of the NYSE. So rotation, 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 and rotating choppy markets are hard to make money. There are no trends here. Um, if we look down at sector-wise, it doesn't look as bad. Again, as bad as I thought. You led higher by financials, industrials, real estate, and the laggard was technology, utilities, healthcare, and staples. Now, sometimes in a tough market you see utilities rally, but I do think utilities are sort of not all the same thing, and those that are impacted with data centers probably had some weakness today. If we look at themes, gold and silver strong again, cybersecurity, which has been out of favor for quite some time. Hold on 1 second, somebody's texting me, make sure it's nothing I need to know about. All right. Leisure and entertainment looks good. Software rallying off of what, it seems like it's hitting the same low over the last several years and bouncing off of it. And where's the weakness today? If we flip the 1% change, semiconductors, clean tech, solar, consumer discretionary from China, China internet, lithium, autonomous vehicles, data centers, telecom, software, Asia, robotics, things that have been strong. So rotation, rotation, rotation. If we go into the timing brief, the weekly does not show a change. We have some weakness, as you can see here in the Qs, but getting close to that WMA. Still need a flip of the bongos for it to turn to a buy. I don't think we're going to flip any of the others, as even though the bongos have gone red on the spider, the weekly spider traded down and bounced off the WMA today. That would be a pretty bad day we'd have to see to pull that to negative. And the Russell and the diamonds, I think, are comfortably where they're going to end up fine. The daily, here's a shock. I forgot to call out yesterday that the Qs had turned positive on the daily. I apologize for that. They did turn positive on the spiders. Um, Look what happened today. The Russell turned positive. So again, where the headlines and the ticker on CNBC and the talk and banter today was pretty negative, the market was not. The broader markets did okay. I think that's a very good thing. If we look at the U.S. index ETFs, we'll see on the daily what some of these reversals look like. So I've got the SPX there. I could put the spider in just as easy. There was a day with a bad data piece. Not every platform has fixed that data piece, but we have, so I think it's okay to go back to the spiders. You know, it's funny, I listen to folks that follow investors.com as I do, and everybody's talking about follow through days. But don't you have to have a pullback and a bad market before you look for a bottom and a follow through day? We're not far off the tops. We had a pretty good day today, even with the big wide range finishing in the spider in the upper part. Look at the bottoming tail. We are closed above the 21, the 17, the 50 that are all sitting right here. Um, it doesn't look that bad. I mean, that's not a vote of confidence as much as saying it looks great, but it doesn't look that bad. Q's a little bit more bothersome, failing at the 100. It opened, traded much lower, closed in the middle, but still below the 50 and the 100. So the Qs are the ones that are weak, and it looks like you had some pretty substantial volume today on the Qs. The diamonds, again, how bad does this look? You're right off all-time highs. You're above the major moving averages. Today was relatively a flat day on the diamonds. They're up, but barely up. Then the Russell, again, this is all-time highs. How do you bottom when you're close to all-time highs? So maybe we shouldn't be looking for a bottom. And maybe my hypothesis is that this is still a pullback and an uptrend is still doing well. Volatility up again today, shocker. Still running up this line. When volatility starts to look like this, I'll be a lot happier. Although we did call out there was a bit of a rounded bottom, but volatility is still elevated. And then the dollar is a non-issue. It's kind of going nowhere, and it is well off recent highs. So I think the dollar is a non-factor right now. If I jump and I look at commodities, with the dollar staying weak, it gives some opportunity for commodities to run. Excuse me. Now, I haven't verified this on another platform. This looks like there could be a bad data piece there. But regardless, even if the gold did trade down this far, which I'd have to verify, it closed up on the session 0.86. Seasonality seems okay. Gold to me probably going higher. Silver, which I would have thought would have taken longer to get its mojo back, seems to, it's got a similar candle, big bottoming tail, closing up on the day just a bit, 0.51%. I would have thought it would have taken a lot of time, and just kill that thing, for us to resolve this drop, but maybe not. I mean, so both of them look like they want to go higher. Oil, what I heard from the Iran-US talk was maybe there was some improvement today. No big output came out of it, and we got two carrier groups there, and things happen when you're sitting there on someone's doorstep with that much power. And you could see oil pull back a little bit today, finishing really flat on the day. If you look at open, means opened here, closed here. So it opened, traded higher, closed off the highs of the day. Natural gas has been weak and continues weak. And then we look at the 10-year, and if the market is down, the 10-year is down. And probably because during the down market are people fleeing to bonds and buying more bonds, pushing up their price. And then the rates come down. So you can see the bonds were down 0.67, closing just above 4% at 4.02 on the 10-year. And on the 30-year, you could see it also down about a 0.5%, closing at 4.67. I heard today that the home mortgages were the lowest rates that they've been in years, so maybe that will stimulate something. Next thing I like to look at are the buckets, and the buckets aren't giving me any signals, so I will move on. Market breadth, tale of two markets. Look at the NYSE. I would say we're at an all-time closing high, not an all-time high. So how bearish can we be if the NYSE is at an all-time high? The stocks above the moving averages are in the higher part of their range, but they're not as high as they go. New high, new lows, AD lines, up, down volume, all very positive today. And the 13-week high-low is at 0.82, which is strong, but it's not a signal to be concerned about. Contrast that with the NASDAQ composite, which had a failed attempt here, closing in the middle of their day, down on the session 1.18%. You can see the new highs at the various moving averages, stocks above the various moving averages, kind of in the neutral, and they too had positive new high, new lows, AD lines, and up down volume, and moved up, showed some strength to 0.57 on the 13-week. I think this is a tough market. You have, not only are we chopping and rotating, you have entire parts of the market going in opposite directions and flip-flopping sometimes from day to day. So you know what happens when you're in a choppy market, your account will get chopped up. So that's why I've been raising cash. If we look at materials, energy, industrials, staples, utilities, real estate still looks strong versus the spider. So not a lot of change there. And if I look at the 13-week new high, new low, you can see the spider at 0.93 is getting to a place where we expect the spider to pull back. 0.95 is where I would start to be worried about it. Now, you could get a pullback that's just a little pullback and nothing significant, like it did in this area here. Here it really didn't even pull back much, just a little bit. But we're kind of extended on the spider by that short-term momentum indicator. On the S&P 1500, not as much. We're neutral on the NASDAQ composite, and we're strengthening on the Russell. So here we are. We got rotating markets. We got chopping around. We got um, you know, different sectors or different markets leading at different times. And that spider telling us that it's getting close to an area where you expect, at best case, some sideways movement. Let's go take a look at the regular sector charts and see if there's any changes there. So I'm combining my traditional moving averages with looking at the timing model. So this is the timing model. This is the 30-period WMA, which is part of the timing model. This is the 21-day EMA. This is the 50-day simple. And what do we see on Bitcoin? Had a nice rally yesterday, gave back some today. And I would say it's kind of holding its own. But would I be buying it here? No. I mean, I've got to see it start moving up. It's going sideways. It's not, certainly not strong. And the question is, by holding its own, has it done going down? Not ready for me. Technology is getting into the moving averages, which is good. The buy signal actually flipped. That was interesting. That was a bit of a surprise. Still, I'd give it a C. Discretionary has not flipped. I'd give this a D. Communications, I'd also give it a C. It's right in the moving averages with the buy signal, but not ready. Industrials, give it a B. It's had a big run going sideways, consolidating here. B plus, still looks great. Financials, trying hard. Not yet a buy. I'd probably give that a D. Energy, a B minus. Seems to be pulling back towards the moving averages, but still in a buy. Materials, same thing, sideways movement, almost a C. I'd like to see it break out of this range. Real estate, similar, B to C. It's in a buy zone, but it's kind of flat and going nowhere. And utilities, I mean, if I had to pick an A, even though it was down a bit today, this is my A performer. It maybe is going to be beginning to go sideways, but we'll see. One day does not make it sideways. And Staples has also done very well. Give this an A or a B as well. So the strength here mimics the strength that we see on the ratio charts. Healthcare, B minus C. It's in a buy zone, but it's stuck in the moving averages. No momentum going sideways. I also like to look each night at the stocks that so many of us own, either in our trading portfolio or in our long-term money. And long-term, these things have all had great moves. But from a short-term perspective, Amazon's up off the bottom. But like Bitcoin, it's struggling. And it had a sell-off today. That would be called a low-close doji, which is a bearish candle in the John Person nomenclature. Um, I have some. Not too happy right now with that. Apple, we talked about how it looked like it was going to break out. It's broken out. Probably one of the leaders right now. If you got to be long, take a bite of Apple. Google, this was a big leader. It sold off after earnings. I like to wait till it got above the moving average before I started nibbling. Meta, same story. I mean, it had a big sell-off after everybody else's earnings. It actually went up on its own. I don't like buying things below the 200, so to me it needs a little bit of work to do. Netflix, actually I called it yesterday. I said, imagine what happens to Netflix if Paramount wins. Well, Paramount wins. Netflix is up 10% after hours. My guess is we probably run back up here into the 110 range, 107, 110. Question is, how long is it going to take? But look for some strength in Netflix tomorrow. Tesla, it's above the 200. It actually flipped to a buy signal on the daily. It's to me still consolidating. And then NVDA popped out of my Darvis box and came right back in. So how much damage was done today? Well, it was down a little bit. It was down 5.5%, but it's staying in the same trading range. It seems to do this after earnings every time. And then is Microsoft ready to be bought? No, it will be. This is how Amazon suckered me in to buy some more, and maybe that's going to do something as well. So I'm not in it. I would wait certainly till it gets above the yellow before I get excited, but it's acting better. Biotech, you know, yes, it was a down day on biotech today. We've had a lot of them lately, down 1.8%. Look at this bottoming tail. Look where it closed. I think biotech's going higher. Pharma is pulling into the moving averages, might actually be giving us a good spot to be looking to buy. Cautious, optimistic. Data centers have pulled back. Now, when they've done this before, it became good buying opportunities. So we'll see what happens here. Um, I don't know why things sold off. Markets have emotions, I guess. But with the backlog being a beat for NVIDIA, someone's going to have to build all these data centers, yet they all had some trouble today. And then defense, I would think it would be going higher here with all the stuff that's going on. It might be giving us a beautiful cup and handle setup, but it's got to break out, and it hasn't as of yet. Now I'm 24 minutes in, but I talk a lot, so I'd be about 15 minutes in if I was doing this on my own. Let's go to the JS layout. And let's go into, first we look down here and we've got almost 3,600 stocks past our filters. These are NASDAQ, NYSE, and Amex, and they're filtered at $1 at 100,000 shares, so we capture almost everything. And let's just take a look at the top-down viewer. This includes all 3,600 stocks, so it will look different than the S&P. Let's see what the leadership was today. All right, communications, financials, and cyclicals. That will be different than the S&P 500s, but this is the broader market, not the S&P 500. Um, if I want to look at just the S&P 500 sectors, I could do that. For example, if I clicked on this, now the leadership, communication, cyclical, financial, but the percentages are different. And now you can see I only got the 501 stocks. If I want to look at just large stocks, I could look at the Russell 1000, but I'm going to look at the base list because I think the broader markets are stronger than the big caps. So why would I want to restrict to just the big caps? So communications, financials, and cyclical, then let's rank the industry groups. So what I've basically got here is a tool that has allowed me to pick the top 3 sectors today. And let's look at the top 10, 2, 3, 4, 5, 6, 7, 8, 9, 10. These are the top 10 industry groups by percent change in the top 3 sectors, yielding 213 stocks. And then let's come in here and let's cut out stocks below 5 and 500,000 shares. That takes me to 131, and let's rank these by 2-day momentum. Let's just go through the list. TKO is one that I like. It's got amazing earnings growth, and it broke out today, and you could see its earnings sucked. Excuse my French. That came out yesterday, but revenue was a big beat and a surprise. So obviously Wall Street loved it because of the move it had today. You can always go here and click on this one here and get an idea. Record revenue and strategic media deals propel growth. So I think when I look out at them and I look at their forward-looking earnings and revenue, this one looks really interesting to me. Should have bought it before. Coulda, woulda, should have. All right, that's supposed to go away. There you go. But breakout from the 50. Spotify, still in a downtrend. Maybe things are changing. Uh, Nexstar. This one looks interesting. Big gap up, pull back to the 21 in a breakout. Let's look at the technicals. Again, not great earnings. Something they looks like probably some big write-offs. Revenue, not much growth. Pays a $2.74, 2.74% dividend. Well, I don't like the fundamentals. I might go and read the news. Let's keep going to find something that looks good. Vacations Worldwide, Moody's, Front Door, IMAX, CBiz. Well, none of these are just blowing me away today, and that doesn't surprise me because with all the rotation, some of what we're seeing are the junk coming up off the bottom, as I just said. Well, I'm not going to find a whole lot that I like doing this, so I might then come back here. Let's rank them by the number of up signals. See, Penn, BYD looked good today. I wonder if they had earnings as well. Penn, the earnings look horrible. Revenue looks good. Gray television networks or gray media breaking out. Um, Not a whole lot here today. Caesar, Boyd. I mean, maybe this is something to be looking at. We certainly got a, what would I call it, a wolf pack of casinos showing up here. So let's get out of this and let's go look at the bottoms up. So I have my 2 favorite signals. One of them is called the A plus, which is my double momentum. Doesn't have many stocks, and the one that we'll look at it very quickly. Privia is a medical group that does a lot, that contracts with payers. Um, the double momentum signal has been my go-to signal. This one's coming out of a squeeze with great relative strength in OBV. It's not extended. Um, this one looks interesting. It's a stock that's been down for quite some time. Um, but on the weekly, it looks like it's actually healthier and higher lows. We'll see, maybe it takes a higher high here. So this one is interesting. QTRX, Quanterix Corporation, healthcare, what do they do? Life sciences and digital immunoassay platforms for precision health. Um, Cheapy compared to Tempest, Guardant, Caris. Don't know much about them. Today, USA Today, nice uptrend pullback and a breakout. Was this on earnings? Earnings came out on the 26th. I don't know if they were good or bad. What does the news say? Rings opening bell to prevent. See, one nice thing that we built in is you can click on the links, and if you wanted to, you could read this yourself. It's an IPO, so it has its own rule set. TH, Target Hospitality, looks interesting here. I'd like to see it above the 200. And my favorite shoes, I'm kidding about shoes. I don't know if I would have ever worn any, but Wolverine Worldwide, because I'm a Michigan Wolverine, and this is a Michigan company. They make shoes, and they broke out, but they got to get above the 200. So nothing here except for maybe the Privia Health are that interesting to me. The other are my A's, and these are my pullbacks and uptrends. And there's a couple things here. Let's just go real quickly at Adamus Trust. So it's a REIT. REITs often pay dividends. This pays an 11% dividend. Okay, you got my attention now. Earnings, they don't do much in earnings. Um, if you are a dividend whore, as I am, I mean, I'd rather see it take out those highs, but I'm going to take a look at this one tomorrow. Big dividend. AME, Amatec, and Industrial. What do these guys do? Manufacturer sells electronic instruments worldwide, laboratory equipment, ultra precision manufacturing, measurement. I got a feeling if I look close enough, I'll find something about data centers in there. Nice uptrend. It's not an expensive, it is an expensive stock. Let's see what earnings are. Earnings came out earlier in the month. Um, Decent surprise. We're going to get $1.90 versus $1.75. Low growth. Nice chart. I mean, beautiful chart. A little bit of a pullback. Band width. Let it get above the 200. BCO, Brinks Company. Here's BYD. Um, it's a little bit more loosier than I want, but I kind of like this pullback here. Breakout above the 50 today on decent volume. And I look up here, $2.21, 12% growth. PE 12.53, a 17% surprise. This might be one that I look at. So BYD is another one that I might look at tomorrow. CPT, Camden Property Trust, another dividend player. Just not a lot of momentum, but it does have a momentum and a breakout from a squeeze. Floor and Decor, retailer I've never been to. Front Door. Don't think these do outdoors stuff. Home service plans, repair, replacement. Oh, they sell home warranties. I don't know if I want to be in that business, although. Gap retailer. Earnings are not out yet. Probably wait for those. IBTA, Jackson Financial. So this is a tax company. 512, it's expecting $6.05. Wow. Versus $5.01. So that's 20% growth. 3% dividend. It has a PE of 4.83. This stock gets no respect from a multiple perspective. So I might do some research in this. Last I checked, we were in tax time. I think if you take out that number, this is an interesting looking chart to me. KNX Trucking, I think, yep. breaking out off the 21-day EMA. That looks good. So there's quite a few stocks here that look interesting. There's Privy again. One that surprised me with the solar selling off is Run's holding up okay. Sezzle is a buy now, pay later. Think of a firm, a couple others in the space. Obviously, when you see this pattern, you know that it had a big sell-off. Let's go to monthly. Boy, you can't even tell. Well, it had, there you go. I'm pulling it up there. Too many bars. You could see the sell-off it had here getting up to 160, 170 and coming back down. Steak Shack, kind of excited. They're putting one in right by me. Plus, if you fly Delta, you can eat it on the plane. Yeah, not yet. It failed at the 200. TGTX is a biotech that I've been in and out of. They used to be a cancer company. They pulled their drug off the market, relaunched it for multiple sclerosis. They got a good story. You might notice one of the Williams sisters, no, not the Williams sisters, the Christina Applegate, the one from Married with Children, is talking about MS and something coming new and raising awareness of MS. She's their official spokesperson. Um, Look at seasonality, look at volume, look at these dots, momentum breakout and volume. Um, I would ignore the red gap dot because at the end of the day it closed at the high of the day and was up on the day. Kind of a belt hold where it opened below the last several bars and closed above everything. That's a bullish candle. TGTX might be my favorite. And then another biotech that looked interesting was ZNCR. A close above that 50, I think would be interesting, or a trade above the 50 will be interesting because I think it closed above the 50 here. See, the close was 1355 and the 50 is at 1340, so that one looks interesting. So I'm going to summarize my thoughts. It felt horrible today. And then I looked at the underneaths. The breadth was good. The broader market is showing some strength. This is more of the same, more rotation. And if it's such a bad day, then why am I seeing BYD? Why am I seeing TGTX that looks good? The PRVA, KNX. There's a number of good stocks here. Be careful tomorrow. It's Friday. There's lots of information. Um, do I think we're out of the woods? No, of course not. I'd be all in. I'd be margined, which I'm not. I still have over 50% in cash, but I'm thinking that maybe we are going higher. And all these YouTube videos, and I never watch the videos, but I love looking at the titles. There's a lot of doom and gloomers out there. What was my favorite one tonight that I saw? Let me find it because it was just perfect. NVDA earnings warning of a coming stock market crash. It could be coming, but this guy's been calling it for every day for the last 3 months. So trade safe, be careful, don't overtrade. I still have some cash on the side because I think we're going to have a chance to buy things cheaper. But right now, you can't call a bottom at a top.